Good evening. Hi, it's Adil bringing you a review of the FTSE 100 in European markets for the 21st of January 2015. Okay, so where are we? Where are we headed? And how did the day's events, or how did price action, or why did price action move the way in which it did? Okay, let's try and fit the jigsaw puzzle together and work out exactly what's happening. Okay, so we start the day off in the morning. Obviously I'm looking at this from an intermarket analysis perspective. That's how I basically trade, so that's what I'll show you, my understanding and my interpretation, and I think that's the reason why you are watching these videos. Okay, so the unfortunately my Royal platform at the moment is not it's not loading up the Shanghai, because it's actually here it is. No, it's not. Okay, but something the Shanghai is loading up Nikkei. No, it's getting ready for the next session, so currently being almost 10:40 at the moment. Okay, so basically we have the Asian markets down overnight, well, the Nikkei down overnight, the Chinese and the Hang Seng obviously up quite stellar, quite substantial, 4.5% there, almost 2% there, so 5%, 2%, so quite substantial move. Okay, obviously with regards to the Chinese policymakers calming down the fears with regards to margin requirements, etc., etc. Now the Nikkei was down overnight, and that's one of the most important bellwethers with regards to understanding and interpreting the markets. Now the Nikkei was down overnight because everybody expected an additional, or some kind of or the hopium trade was basically in play, and everybody expected an additional QE or some form of new QE, and really the market would had high expectations basically, and when those high expectations are not met, obviously the market discounts everything in. And when the trade unwinds, then obviously stop losses get triggered, and the market, and then obviously the variable can move in the opposite direction. And that's exactly what the case was. We had the USD JPY. If I just bring up a chart of the USD JPY, you can see here a slide overnight, and that obviously caused the Nikkei to obviously slide lower as well. And that's what we had, a risk-off scenario. So when you come into the European session and you see the Euro stocks, for example, if I just bring up a 10-minute chart, the Euro stocks here. Okay, you can see the Euro stocks here gapping up, so it all closed at 45, so it's gapped up by about 10 points. And then we also had the German DAX, or even if you look at the CAC, for example. I mean, I can look at a 10-minute chart for you and show you the gap on there. Okay, so we seem to have gapped up here, and from 4,395 to almost 12 points there, gap. We also had the German DAX gap higher as well today, so gap and go as usual. We had a German DAX gap as high as almost 30 to 40 points basically. Okay, so when you have the markets gapping higher like that, then that generally means that they've factored in or discounted in the Chinese move, but they've not taken into consideration the Asian or the Nikkei or the Japanese move. Okay, so they've discounted the Chinese move but not the Japanese move. So given the fact that the yen pairs, and along with CHF, and obviously the CHF is distorted to a large extent now, but the US dollar as well, they basically give you a clue as to what the market's interpreting, or how the market's interpreting risk. And if they start to appreciate, then that generally means it's a risk-off type scenario. Okay, overnight obviously we had the oil price certainly down to a large extent, certainly under pressure as well. Copper obviously under pressure as well. So certainly not good signs. Okay, certainly not good signs for the market. So I interpreted that as risk off. We already had, to a large extent, we've already got QE baked in. There was talk with regards to Schäuble, or was it one of Merkel's advisors, stating that QE hasn't even been confirmed yet. QE it still needs to be, it's still under discussion, etc., etc. Because we had reports of QE being almost a given. Okay. And when you have reports like that, then that obviously cause risk off and causes the markets to fall. And as you can see here, the markets certainly fell. So we certainly had this gap higher. Markets sold off immediately, as you can see with regards to the German DAX on the 21st of January. And why did the market sell off? Because as we already know, it was due to the risk off scenario in Asia. Okay, and also talk, or downplaying talk, of QE. And also we had concerns, obviously the Brexit concerns. There was certain news flow that was coming out that wasn't exactly bullish. And with regards to the interpretation of QE not being allowed for the Greeks, okay, again, that's not exactly a bullish sign. So if you use your TA and follow your TA, you can see that you had a nice bearish trend line there, and that's exactly what was obedient. And as soon as we closed the gap, then the market reversed quite powerfully higher, and I'll explain why that occurred. Okay, so I initially took the short side, given the fact that IBM earnings weren't exactly spectacular, but Netflix certainly was spectacular, and that had already been factored in as well with the the Nasdaq high quite substantially into the 80 region. Again, all that had been factored in. Okay, so once all that was factored in, it created a risk-off type scenario, especially with the yen. Like I said, that's a clue. Watch USD JPY and Euro JPY, and then obviously the bias was on the downside, especially with anti-QE comments and pro-Brexit comments as well. That certainly didn't help. Okay, all those scenarios put together certainly created a potential risk-off type scenario, and that's why the markets moved lower. The reason they sold off. Okay, now the only exception there was the FTSE, and as we all know why, when with regards to Wheel and McCafferty coming out and with their they're hawkish. They dropped their hawkish stance basically. Okay, so they were against raising rates, and they were the only two dissenters on the board. So once they are out of the equation, then obviously, given the fact that the inflation data has been so weak, so it certainly doesn't strengthen the argument there for any type of monetary tightening, shall we say, or tapering, so to speak. Okay, so that certainly gave a bullish bias there with regards to the FTSE, even though the oil price was certainly under quite a substantial pressure, and that's basically the reason that occurred. Okay. So once we had that come into the equation, the markets obviously sold off. We can see the yen pairs, obviously, as you can see how important the yen pairs are here. And then we stabilize. Now, why did we stabilize here? Because number one, we have gap fill support, so therefore that's support. And number two, we stabilized because there were rumors and there was talk with regards to 50 billion. I think it's 50 billion a month QE, lasting up to obviously accumulating over a 12-month period, and being in the region of 600 billion. Okay. In terms of supporting the economy, and as you know, as soon as that news hit the wire, the market short squeezed and moved higher rapidly. Then you had another comment saying that they negated it, and obviously markets moved rapid higher as again once it was more or less confirmed, etc, etc, etc. Okay, and that's exactly what occurred. That's basically your interpretation of today's events, and with regards to why the price action was initially bearish because of the Nikkei being lower and the yen pairs obviously weighing on sentiment. As we all know, the markets follow the Kool-aid, and even though you have hopium from Europe, still it's very important to follow the USD JPY and Euro JPY, or yen pair. Well, the yen in essence, okay, because as Mr. Murphy explains, and Anna Cooling to a large extent works off that yen is obviously a risk-off barometer, okay, and or risk-on barometer as well to a certain extent if it starts to fall. Same with CHF, same with the US dollar. Okay, so that's how you interpret the markets from that perspective. Okay, right. So now what's going to happen going into tomorrow's obviously day, or Thursday, the 22nd of January 2015. So where exactly are we? Okay, let's bring up the actual FTSE 100 first of all, because as you know, I trade the FTSE on a daily basis. It's been a good week so far. We're on 214 points for the week, so that's good. Okay, in 3 days trading. So I did get, actually, having said that, I did get chopped out. I got chopped to pieces overnight on the Aussie and the Kiwi. I lost almost 100 pips overnight on that. I got stopped out my long Aussie trade. I got stopped out my long Kiwi trade for minus 40, minus 30. I then switched my position on the Kiwi, and certainly that didn't go well either. That got stopped out. So it was a bit of a nuisance really, but eventually, I mean, as traders we always have our stop losses in place to protect us, and thank God I did. And as always, keep good risk management, good money management, and I managed to make it all back. Okay, and I'm back to 214 points for the week, so happy days. Okay, happy days. Right, so how are we interpreting this, and where do we go next? Okay, FTSE 100, I mean, we need to go back to the weekly charts here now because it's so important. Right, okay, so we have Mr. Wheeler, Mr. McCafferty, obviously no longer dissenters, therefore you have easy monetary policy. You can call it QE to a large extent, and what happens, the markets short squeeze and move higher. Okay, that's basically the interpretation. That's exactly what we expect to happen. Now we had this bearish engulfing candle here. This would lead, you could say, to a large extent based on Russia, the ruble concerns. You can say Switzerland concerns regards to that. Okay, You could say geopolitics, okay. So Brexit phase, okay. So these are all concerns that we had. QE phase, whether we get QE or not, okay. Now that we know that Mr. Wheel and Mr. McCaffrey are no longer the hawks on the board, then the concerns with regards to raising interest rates are no longer there, okay. Therefore, it's conducive to growth, and that means that our rates will stay lower for longer. We have higher disposable income. Businesses obviously have lower costs of capital or financial, we say, okay, and the markets generally move higher, okay, and that's exactly what we're expecting to happen. So this is quite a substantial move. This is, I mean, also adding the fact that you have QE now from the ECB, and any type of QE is going to help the consumer in Europe. And obviously, where do you think the money is going to go? It's going to be spent on exports, and most of the exports obviously will more than likely going to help and trickle down into the actual UK markets. Remember, all markets are interrelated, so if one goes high, the other one will as well. So this is the FTSE 100. The weekly chart explains all. Okay, daily chart, I can explain this to you. I mean, we did have a solid resistance level here. Previous support equals resistance. We had 200 MA resistance. We had diagonal trend line resistance, and what happened? The market tore right through it. Okay, so where is and what will be the next resistance level? So you have a resistance here. So 6750 is more or less the next level. Then you have above that is going to be 6760. Okay, that's basically what we're looking for. If we go past that, then you have resistance up here, 6880, 6890, etc., etc. So this is quite a substantial move. Now, if you really wanted to look at this and really focus on this, and really the most important thing that's going to happen here now is that it's all about the QE. Now, nothing's been confirmed more or less as of yet, and obviously Germany has to have its say so. But this is going to be very interesting, especially with regards to Brexit phase obviously being alleviated as well. What you have here is an inverted head and shoulders pattern. Okay, the inverted head and shoulders target is 6150. Take it to the neckline, which is around the 6700 level. This is definitely going to get us past 7000. Okay, definitely going to get us past 7000. This is quite a substantial trade. The European QE could be the catalyst for that 7000 level. I mean, we've tried it how many times now, but this definitely is the catalyst. I mean, I can't see why not. Okay, that's my interpretation. Now, I cannot see, if you have a bearish engulfing candle negated like that, it generally creates a short squeeze and brings the bulls back on board. I mean, you're looking at 6900, 7000 easy, my interpretation. Okay, definitely. Okay, so again, let's wait for QE to actually be confirmed. Everything's set in stone. If that's the case, I mean, we could certainly get a bearish engulfing candle tomorrow on news that Germany obviously negates QE, etc., etc. I mean, what's impressive is that oil is still in the $46 region, and yet FTSE is on the verge of attacking 7,000. So once oil stabilizes, what do you think will happen to the FTSE? Then it'll be attacking 8,000. Okay, so this is quite interesting now. Okay, right. So let's look at the smaller time frames. Okay, so it's a 60-minute chart. As we already know, the next resistance levels I've already shown you. I can't see any resistance in this zone now. You're looking at 6750, possibly 6780, and then once we get to that level, we'll see exactly what happens. But for now, it's higher highs and higher lows, so you can't even start to say the FTSE is into resistance. Okay, the FTSE 250 again. This is quite a stellar move, obviously, with the Wheel and McCaffrey now out of the way in terms of their hawkish stance. Dissenters on the board. It's cable is basically on a plunge. Okay, once cable goes on a plunge and it moves lower, then that's going to help exports anyway. And also, given the fact that QE is now more or less, it's nothing been confirmed yet. Like I said, it needs to be confirmed. We could tomorrow, all of a sudden, the Germans could come out and talk it down again, and the market's reverse in the opposite direction. But if it is set in stone and that has been confirmed, 50 billion per month, then obviously the European or the UK exporters are going to benefit, and obviously the FTSE 250 is more or less an export index for the UK market. So all the small caps, small caps, what medium caps, basically will stand to benefit from that QE. So it's all about Kool-aid pouring into their coffers, and that's a good sign. Okay, so exports were on the rise, so that's certainly bullish. The volatility index is now coming into support, but having said that, I mean, given the fact that we've got QE and there's QE trumps all fears. Until we get down to the 10 or 12 region now, going to be very hard. Going to be very hard. Again, like I said, any geopolitical, socio-economic black swan event can certainly change things, like the CHF or the Swiss National Bank last week. But given the fact that everything is more or less set in stone, like I said, then you are looking for a move lower there on the wicks, and obviously that FTSE 100 will certainly move with it. Okay, let's look at a German DAX now. I think that's enough of the FTSE 100. Let's go to the 60 daily chart. Sorry, daily chart certainly bullish. As you can see here, that we tried. Well, we didn't try. What we actually attempted to do is we want, as any healthy market will do, it'll pull back and close the gap. That's exactly what he did. He went pull back, close the gap, bang off. It went to the races. So interesting. Okay, interesting. But then again, technical analysts out there will say that that's a sign of weakness as well, because we've gapped. Well, we've moved higher, but we've not really moved higher with much steam. It seems to be doji. Then obviously quite a sell off, and then the bulls come back in. So they've not really controlled the market as such. They're more or less defending here rather than aggressing. Okay. So again, open to interpretation. I mean, those that follow Japanese candlesticks will know what that candlestick is, and it's generally considered a potentially reversal signal. So again, I'll spare my judgment there with regards to that. But for now, like I said, if QE is set in stone and they have agreed to that 50 billion per month, and I can't see why the DAX will not power ahead. Obviously, if the situation changes and Germans come out and totally and become pro austerity, pro reform, because the Germans don't want to be seen as being rewarding poor reform and rewarding anti-austerity. So that's a bit of a conundrum for them. Okay, so 60-minute chart, the German DAX, a double top resistance is going to be crucial there, 10,300. If we break that, then obviously we continue higher. So watch out for that. Okay, so 10,300. 10-minute chart, we did close the gap today, so it's perfectly healthy, it's fine. And obviously we've moved higher. So like I said, 10,300 will be key. Let me just get rid of all these other trend lines now that are not going to be required. 1 second. Okay, so our gap is the one that's gone now. Okay, so we had some sort of form of H&S here today, and obviously that H&S failed to translate because of the QE, obviously hopium trade. So that's basically where we are with regards to that. So again, to watch out for 10,300 DAX. If you pop that, we continue higher. Let's have a look at the French CAC. 10-minute, very bullish. I mean, there's no way you can think of shorting that. A 60-minute chart, really, we're in obviously no man's land now. No man's land, so this certainly goes higher. There's nothing stopping the French CAC from moving higher. And again, the next level of resistance is going to be this upper region here on the 4510. And then obviously we'll see exactly what happens there. We do have this gap fill here, which is around the 4517. The next level will be there, and then obviously you've got gap fill up there as well. So gap fill at 4600, and that's not, I mean, that's certainly just a matter of time really with regards to if QE is set in stone. Remember, it's all about set in stone. If QE isn't, then it will get a powerful reversal in the opposite direction again. The Europe 350, S&P Europe 350 again, very bullish. We've broken out all the resistance lines. Like I said, see that this is the same candle on the FTSE 100. Yep, you had a bearish engulfing candle. What happened? We negated it. So whenever we negate it, it creates a short squeeze and we move higher. That's exactly what's going to happen to the FTSE 100. Okay, folks. So I'll quickly go back to the FTSE 100. Given the fact that it's lagging, given the, I mean, like I said, you always get divergence and you get lag as well. If I go to the weekly chart, you'll see it's exactly the same. Okay, exactly the same. There you go. There's a red candle on the verge of breaking it, and we move higher. So I think my conclusion of my video is this: is that if QE is set in stone and the Germans don't oppose it, okay, and there's no headlines out with regards to Germany opposing it, or there's no concerns with regards to Brexit phase, or there's no geopolitical events that are a black swan type event, basically, we go higher. It's very hard for me to justify going low, unless obviously the Asian markets are down overnight quite heavily. say the Shanghai or the Nikkei close down quite substantially, then the situation changes. Okay, and also with regards to Draghi as well, if Draghi disappoints and the euro starts to short squeeze higher, etc., and that 50 billion euros per month is all BS, okay, then obviously the markets will reverse. So tomorrow is going to be very interesting. There'll be a lot of rumours flying about, a lot of talk, etc. I think the less we trade tomorrow, the better. I think it's more about observation, understanding, and seeing exactly what the details are, and then trade accordingly. If you are going to trade, you may well have to have larger stops, but I think really it's going to be very risky trading tomorrow. I think it's best just to sit back and observe and watch exactly what happens in the markets. I will be travelling to London hopefully tomorrow, so those of you that are in the London area, give me a shout. We can grab a coffee and we can talk trading. Okay, folks, so risk on, risk off, wax on, wax off.